All right, y'all. Welcome to session 3. And in this session, we are going to be continuing on with support and resistance. Two of my favorite words. When I hear support, when I hear resistance, it fills my heart with the deepest joy. And in this session, we will be talking about using volume, trading volume, buying and selling in order to determine levels of support and resistance. Now, if you remember last session, I was talking about starting on the weekly time frame and finding areas where the price has found a sticking point. And when we find those areas, what are we going to do? Well, we're going to put a horizontal line there. And of course, we're going to name it the weekly level, right? Weekly. And I was saying this, right? That this is showing us areas of high liquidity in the market, a lot of buying and selling. Okay, because price is trading right along this level, buying, selling. The price isn't going up, it's not going down, it's buying and selling right on this level. Which then, when price comes up and then retraces, right, the market will remember that there was a lot of liquidity in this level, and the price will retrace back to that same level of support and resistance because there was a lot of buying and selling in the market. Now, there are tools we can use to determine which prices had the most buying and selling, and that is called volume. And we can use volume to mark levels of support and resistance. Now, there's two types of volume. The first type is right here. If we go to indicators and just search for volume, we will have this. Okay, this will show us buying and selling volume. Okay, actually, it doesn't differentiate between buying and selling, but it shows us volume. And it's showing us how much volume was traded in a certain period of time. So during this week, the week of February 22nd, this purple candle here, this purple volume candle, is showing us the amount of volume that was traded during that week. Or back here, the week of December 14, 2020, this blue candle right here was showing us how much volume was traded during that week. Now, these candles are important, and we'll get into them more later for determining how powerful a move is going to be. But there's another way to look at volume. Instead of looking volume in the scope of time, we can look at volume in the scope of price. How much volume was traded at, let's say, this price, $46,475. And if we can find areas where a lot of volume was traded, if we can find a price where a lot of volume was traded, we can then have a level of support and resistance. So what we're going to do is we're going to come to indicators. And sorry, excuse me. Here, my phone just farted. We're going to type in visible range. And we are going to click it. I don't know if this is available in the free trading view, but there's comparable versions. If you don't have the free trading view, you can type in poor man's volume profile. Okay, poor man's volume profile. And this will basically do the same thing for you. But I like to use the visible range. So I'm going to come to indicators, and I already have it starred here. So I'm going to go ahead and click it. And what this does, and let me show you, this is my customized version. Let me show you how it will look when you first open it up. This is how it will look when you first open it up. Okay? And this will give you three main areas of importance. You can see over on the right-hand side that there are areas where it's bright and then it fades out, right? You see how the color changes from being lit up to being dark, okay? And the same will be true if we zoom in a little bit here. It's true on the top and the bottom, right? We have areas of dark, areas of light. What this does is it gives us 3 points that we can use for support and resistance. We have something called the value area high. The value area high is basically, this thing is marking out for us a trading range, a range based around volume, a range based around how much volume is traded at certain prices. Where the color changes from light to dark, this is known as the value area high, okay? The value area high, oftentimes referred to as VAH. And on the bottom where the colors change, that is referred to as the value area low. the value area low. And that's oftentimes referred to as VAL. And then this red line in the middle, this is the point of control, oftentimes referred to as the POC. Okay, point of control. I'm sure many of you have heard these terms before if you've been around on the internet. This is what they mean. And these can be levels of support and resistance. The point of control is the price that had the most volume. Now, the visible range will show you the volume on whatever you're looking at on the screen. That's why it's called the visible range. If I have the entire Bitcoin history for Bybit pulled up, the visible range will be showing me the value area high, the value area low, and the point of control for the entire visible range. If I decide I only want to look at, let's say, this price action, okay, you can see now it's giving me a different range, a different value area low, a different value area high, and a different point of control. It's showing us the range of whatever's visible on the screen, okay? Now, this is important because you can see that the point of control is acting as a level of support and resistance. And if we mark out the value area low here and the value area high, we can also see that these areas have been acting as a resistance and a support. Look, this value area low was resistance, it got flipped into support. And then when we lost that value area low, it got flipped back into resistance again. And a lot of times what you'll notice is price will trade within this range. And if we lose the range, then the previous value area low will become a new range high. Okay? Now, just bear with me because this is important for marking levels of support and resistance. What I like to do with this is I like to click the gear icon. And I like to set the row size to 200. And I like to set the value area to 70. Now, if we're analyzing a chart, like let's say on the 4-hour, right? And I'm going to just go ahead and clear all of these other lines here. Okay, and I'm going to refresh this. What we can do is we can look for areas of high volume and make these support and resistance levels, okay? So, for example, 57.4, we can see a spike in volume. Now remember, there's peaks and valleys here. Peaks and valleys. The peaks are high volume nodes and the valleys are low volume nodes. Okay? The peaks are high volume nodes and the valleys are low volume nodes. If you see a high volume node, you can go ahead and mark a level of support and resistance at that node. Okay? At that node. And you know, it doesn't have to be all of them, but it can be. It can be. And this is one way to find levels of support and resistance. And what you would want to do is find something called confluence, right? Confluence. That's where we want to look at our volume levels of support and resistance and see if they match up with our daily or our weekly levels. So we come over to our daily time frame and let's see if we can find an area, a daily level of support and resistance that lines up with these high volume nodes. It doesn't have to be exact, but it can be close. Okay. Well, I can see right here, for example, that we have this this weekly level right up here of support and resistance that lines up very similarly with our high volume node. And so we can say, okay, this is a stronger area of resistance because we have two things here that are pointing that this is a resistance. Okay. Now, you know, if you're just looking at a chart, maybe a 4-hour chart, and you have it zoomed out like this, and you have your volume indicator on, this is a great way to find areas of support and resistance. And you can just kind of see, if you look for these high volume nodes and make a horizontal line on them, it just so happens that most of the time, price will respect these levels, right? Look, price is respecting this level. Why? Because there was a lot of liquidity in the market there. This high volume node, price respected it back here in April, and price respected it again back here in May. Okay? Now, there's a few different ways to use volume to mark levels. You can use the visible range, also known as the VPVR indicator. But something else you can do is you can use a fixed range indicator. A fixed range is, instead of giving you the volume for what's visible on the screen, it will give you the volume only for a specific range. So there was a very important level that we had. In fact, if we go to the weekly time frame and we put on our VPVR, there's a very important level, which is the value area high of basically the entire history of Bitcoin, which is right here at about $51,317, right? $51,317 marks the point when we lost this range, okay, because this was a range here with the point of control up here, the value area high here, the value area low here, and we fell back into another range down here, okay, another range down here. And when we're looking at this weekly time frame, it's a very big range, right? It's a very big range with a point of control right here, a value area low right here, and a value area high right here. What we can do now is I can say to myself, okay, I'm curious about the volume after we lost this level of support. And so what I can do is I can go to the 4-hour time frame, and I can come up to indicators, and I can search for fixed range. Okay, fixed range. And now what I can do is I can click and drag from this red candle all the way to where we're at now. And what this does is this gives me another volume indicator, a volume profile it's called, with its own value area high, value area low, and point of control. And, you know, it's very interesting because we can now use these levels to determine support and resistance along with our other daily, weekly, 4-hour, and other 5-minute levels. If you see that price is coming up to a point of control, just look at how it's respected. We get a bounce off of it here, we get a bounce off of it here, we get a bounce off of it here, we get a rejection off of it here, a rejection off of it here, and now we're just trading right along it, right? These are areas of support and resistance that we can use in conjunction with our other levels, our daily and our weekly. Okay, so this is very important, and so let me show you how I would do top-down analysis, doing my weekly levels, and then doing using volume as well, okay? Because now what we're going to do is we're going to add another layer to our support and resistance. Another layer. So we'll start on the weekly time frame, okay? And we'll zoom out here. We'll start on the weekly time frame, and we will zoom out. And we're going to just go back into the past and find areas where price historically has found a sticking point. So let's see. I got one right here for the weekly. Got one right here for the weekly. Got one right up here for the weekly. And honestly, I would put one here too. Put one right here at about 58.3. And honestly, I would get rid of this bottom one here simply because the fewer levels, the cleaner it is, right? The cleaner it is. And honestly, you know, we could even put one right here too. 34.6, a weekly level at 34.6. So we'll go ahead and mark these, okay? I like to make my weeklies yellow and the text weekly. Man, that didn't work out so good. I made it black. I made it black and okay. Weekly, weekly, weekly. Make it yellow. Weekly, yellow, and then weekly with it yellow. Okay, then we'll go down to our daily time frame and we'll do the same thing on the daily. Okay, so let's see if we can find some nice daily levels of support and resistance on this chart here. Okay, we're back in January. I would mark one right here, a daily level. I'll make it orange. They're color coded, so we don't have to write everything on here. Yeah, I'd put one right here as well at 32. Put one right down here at about 45. Yeah, right about 45. Where else would we put one? Put one right here at about 54K. That was a very important level that we traded for a long time. And you can see how these levels are respected as support and resistance, right? So now what we want to do is, now that we've done our top-down analysis, of course you can keep going down to the 4 hour, but for the sake of time and for the sake of example, I'm just going to stick to the weekly and the daily. Now we put on our VPVR. Okay, now we put on our VPVR. And we would mark out some high volume nodes on here, right? So this is the highest volume node that we have right here. This is a high volume node. So we draw a line here, and I like to make my volume levels pink. Okay, so I'd make it pink, and I'd make it say high volume node. Okay, and we have another one right here. Okay, this is a high volume node. Okay, let's see if we have any other peaks. We do have one right here. This is a high volume node. And then right here, we have a high volume node right on the weekly time frame, right on it. Now, if you see that you have a weekly and a high volume node at the same place, right? This is called finding confluence, where we have two levels on the same exact place. This means this is a very strong level. And we can see it's very strong. We've been unable to close the daily candle below this level since May 19th. Is currently June 1st, okay, also known as June 1st, the 1st of June. And so this is giving us areas of support and resistance that we can also look for when we're doing our analysis. Now, we don't have to have these all on the screen at the same time, but I would just like to point out the fact, okay, that they have been respected, right? If we've been trading in this range here, okay, our daily's been respected, our weekly's been respected, this high volume node has been respected as resistance at 37.2. In fact, this is a level that I've been shorting all day yesterday. We have a level right here that has been respected as our support, and then this daily all the way back from January has been respected. So we can see that this is how we're going to get our levels. And then we want to take it to the next level. Okay, we can say, okay, when we lose this weekly level right here at 48,000, okay, we lost this weekly level at 48,000, a very important level of support. Okay, we can say, okay, we were trading above this weekly level for a very long time, right? We've been trading above that weekly level since March. Now that we've come back below it, that's a very significant thing. Let me draw a volume profile just from the time that we lost that level. And so you'll pull out your fixed range, and you'll pull it from when we lost that level down to where we're at now. And now we have our another volume profile here, okay? And look at this. Our point of control lines up perfectly with this high volume node that we had just by looking at, our VPVR. But then we can get maybe another area of support and resistance by our value area high right here and our value area low right here. And I know it's getting sloppy, guys, and you don't have to have all these lines on your chart at the same time, but look at the value area low from this fixed range. Perfectly to the dollar, we come down and get a bounce off of it last night, 2 days ago. And again, this value area high, we wick off of it right from the $40,200 level. Okay, the first time we come into the daily, the second time we come up to that value area high. And so this is how we're going to find areas of significance on the chart. Okay, this is another layer. First, we mark it by eye with our weekly, daily, 4 hour, 1 hour, 5 minute, 1 minute. You can do whatever you want. Then we're going to use our VPVR indicator to get overall high volume nodes and stuff like that, and low volume nodes. By the way, high volume and low volume nodes can be used as areas of support and resistance, but the high volume nodes are better. Then we use our fixed range to really zoom in on an area, to zoom in on a local area, right? We're just dealing with the price action after we lost this support. And we're saying, okay, after we lost the support, what are the significant areas of volume? And look, guys, look at how these levels are respected. I know this is sloppy. You don't have to always have this on your chart. You don't always have to have this on your chart at all times. But if you're trading this on the 1 hour time frame, right, just look at how price respects these levels, right? We come up to our resistance areas, we come down to our support area, we come up to resistance, we come down to a support. When we fall through it, we come right down to another support. We fall through that, right down to another support, right? Bounce off support to resistance, resistance to a support. Okay? From this support, we come up, bounce off this support to this resistance. We reject off this resistance. We're on our way back down. We come down perfectly to this daily level that we marked all the way back in January and come all the way up to this daily level, which we marked all the way back in January. We reject off the daily level, come down to a high volume node, bounce off the high volume node, reject off a high volume node, come down to a high volume node, bounce off to another high volume node, come down to a high volume node, get a nice bounce. You know, it's very important that we have these levels marked out. And then what we're going to do, guys, is we are going to use Market Cipher to determine if we're going to get a bounce or not. Because think about it. How would we know if we were going to get a bounce off of all of these supports right here, or are we going to fall through? That's where we use Market Cipher, and I'm going to get into that in other videos. But basically, if Market Cipher is printing a bottom, you know we're going to get a bounce, right? And we're going to get into exactly how to determine that in my trading strategy videos. But this was just to show you how to come up with support and resistance levels using volume. It's very important. Make sure to practice doing this. Some of it is more subjective, but if you can really drill in on those areas where you find, especially those weekly levels, if we are trading below a weekly level for the first time in a long time, or if we come back up above a weekly level for the first time in a long time, you can pull out your fixed range and get some nice levels there. Okay, so I just want to highlight how important it is to draw out our support and resistance. And then as we progress in the course, we're going to be talking about how to use Market Cipher to really drill in on those entries, to know when we come to a level, are we going to get a reaction or not? All right, guys, God bless all of you. We will see you in the next session. And I said I referred to myself as we. Yes, I did. That's weird. Yes, it is. Okay, you're going to have to deal with it, all right? So there's one more way we're going to talk about to get our levels of support and resistance, and that's going to be Fibonacci. Very important. We will deal with that in a later session. All right. God bless, and I'll see y'all later.